In this month's economic update, Kaplan Professional Education's Victoria Papandrea speaks to an industry economist about the short-term domestic and global economic outlook.
Welcome to Kaplan Professional Education's August Economic Update. I'm Victoria Papandrea, and today we're speaking to independent economist Don Stammer. Don, thank you so much for joining us today.
My pleasure.
Firstly, Don, let's look at Europe. In the IMF's update to its World Economic Outlook, it reported the situation in Europe still remains quite unstable. What are your thoughts on that?
The IMF in fact said in its update that the European problem is of the utmost importance. They looked at the problems in China and the US, but clearly European problems are the greatest. To be fair, the IMF pointed out some things are now more positive in Europe. You've recently had announcements about recapitalisation of banks. You've had announcements about bank supervision. You've had announcements that the European leaders are going to look at the European monetary authorities directly buying the bonds of individual countries. All of those things are positive. Nonetheless, Europe has a lot of problems. In looking, though, at what the IMF has said about Europe, we need to allow that the IMF is a player in the policy for Europe. It's looking to recapitalise itself so it can lend more to Europe, and obviously one way of doing that is to emphasise the problems in Europe. Also, the IMF knows that the European countries have to take some tough decisions, and emphasising the problems of Europe as it's done is a good way of achieving that. So overall, the IMF is correct to say that Europe is the centrepiece of global economic concern, but they probably overdid their analysis for their own reasons.
Don, the IMF report also pointed to ongoing uncertainty in the global economy. Now, do you think we're seeing any signs of this global slowdown impacting heavily on the Australian economy?
The IMF correctly pointed out the world economy grew less rapidly in the second quarter than it did in the first quarter, and the IMF has revised down its forecast for global growth to 3.5% this year. That comes after 4% last year and 5% in 2010. Now, those figures are still pretty good. The IMF, however, did point out that the risks now are on the downside, and Australians must be pretty careful to watch what's happening to Europe, what's happening to China, what's happening to America, just to see if there are further downgrades to global growth. But as far as Australia is concerned, the big impact of the slowing of global growth has been felt in the share market and the bond market, not in terms of our economy. And prospects are still very good. We'll have something like 3% growth in Australia next year, even with a bit of a further downgrade to global growth.
Don, looking to the US now, economic activity in the manufacturing sector contracted in June for the first time since July 2009. Should this decline be a major concern for the world's largest economy?
It should be a concern, but not a major concern. Overall, US manufacturing's been doing well. There are special things about car output in America at this time of the year, so I think we can put those numbers aside. The encouraging news from the US is better statistics on housing. In fact, quite a few recent statistics on the housing sector have been more positive. Probably the biggest worry for the US is what happens in January when the so-called fiscal cliff arrives. Some various tax cuts that were announced many years ago run out on the 31st of December, and you really do need Congress to face up to that issue, to extend some of those tax benefits. But overall, the US is pretty well locked into very slow growth. People no longer concerned about the US economy double dipping. The problem is, can that slow growth be stepped up a gear to moderate growth, and that would be very much helped by extension of the tax cuts and avoiding the problem of the fiscal cliff.
Just finally now, Don, turning to Asia, do you think economic growth in China is starting to stabilise?
It certainly appears as though it's stabilising. The recent figures for GDP in China had growth of 7.6% in the 12 months to the June quarter, and those figures implied a slightly better June quarter than China achieved in the March quarter. China's already made 2 cuts in interest rates, and recently it's also announced big increases in incentives to people to go out and spend. Probably China is well placed for a soft landing, however accidents happen. And so many people in markets around the world are looking at Chinese growth. Even if we had 1 quarter of growth, say sub 7%, I think markets around the world would react. I think it's unlikely that China will have a hard landing, but it's possible that China will have one or two bad economic numbers or surveys. International markets will react pretty strongly to that. But as far as Australia is concerned, China almost certainly will avoid a hard landing. Over time, that's good for Australians' exports, but we must allow that even though we're in a super cycle in commodities, thanks largely to China, there'll be bumps on the way, and you can't rule out another bump or two later this year.
Don, could you explain what those bumps might be?
Yes, some of the bumps could be adverse figures from China on things like industrial production or exports or demand for steel. I mean, the Chinese economy is a big and complex economy. Parts of it has excessive building, and every now and then China could have an economic number that's weaker than people had been expecting or fearing. And so many people now around the world, particularly those involved in resources, look at every statistic coming out of China that occasionally you could have a month with one or two very weak economic numbers. The response in the rest of the world would be excessive, but it's something we must expect and allow for.
Don, thank you so much.
My pleasure.
And that brings us to the end of the August PD sessions. Thanks for watching. If you have any feedback or questions, please drop us a line at pdcontent@kaplan.edu.au. I'm Ron Wilson. I'll see you again next time.